Morning everybody, Mike Niemiec here with some early morning grain and oilseed comments for Wednesday, January 22nd. Well, after yesterday's suppression in price, most of the overnight trade was trying to get somewhat of a technical rebound in the overnight trade. But even as I come on right now, we're seeing a little bit of slippage in that scenario. Beans are up in the neighborhood of around 4 to 5 cents in the overnight trade, but now they're down 3 cents, so that's given up the ship after being down sharply yesterday, and pretty much the same thing in the meal now down around 50 points. The soybean oil down around 20 points, but that was strong yesterday, and the corn and the wheat trying to hold up their end of the bargain. On the plus side, they're up around 1 to 2 cents. So once again, after yesterday's suppression, now a very feeble attempt to try and get a rebound in prices. There were three things that really came into the bean markets yesterday as far as hitting it. Number one, the rains that came in Argentina and forecast for additional rains to come to help to facilitate the growth of the crop, both in the corn and in the beans, probably more efficiently for the soybeans. There was also talk that there was switches of beans from the U.S. to Brazil by foreign buyers, China in particular. Don't know how true that is because we didn't get any confirmation. But as we've been saying all along, as we work our way forward, and if South America has a crop and if their logistics and their farmer selling rate is adequate and thus being priced smaller than us, that the bean demand pace that we're on right now will start to shrink. There was also some talk of some imports of beans meal in particular into the East Coast. So that whole combination of this switching and or importation talk kind of weighed on the beans as well and the soybean meal. And then the third factor was the fact of the commitment of traders report, which showed that the trade had been building again bean and meal positions versus what they had being net short the corn, wheat, and the soybean oil pretty much set the stage for the type of price action that we saw yesterday. We are still, however, long the beans and the meal, that being the managed money, so that is still perhaps underneath the gun if we continue to work our way fast forwarding in here, that being where South America does indeed have a crop, move their crop, load their crop, and us seeing our demand pace start to shrink. But in the short term, that demand pace for beans is still quite good. We still saw a very strong export number for the beans yesterday. It continues to highlight the fact that we are shrinking our carryout number for row crop beans. We're currently at 150, and theoretically that should continue to support the nearby spreads, particularly when we lost our bean registrations over the weekend and are now back to zero and only one meal. The only fly in the ointment on that scenario, however, going forward in here is that over the short term, we're going to start to get into the index rolls of the March contracts, and that means that you're going to have this flood of orders, be it the pre-people that want to front run them, or the actuality of it going on, that being people buying the May, selling the March beans, which negates the demand pace that we're currently on, tightening up our old crop carryout for beans. Not much really new in the corn and the wheat. Like I say, it's pretty much being perhaps technically supported by the fact that the trade's net short and the weakness in the beans and maybe some unwinding of those positions. Those two markets, wheat and corn, look pretty much sideways over the near term, awaiting fresh news. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.